Imagine a company quietly innovating in one of the most critical sectors, only to suddenly explode onto the market, reaching unprecedented highs. This isn't a tech giant, but a nuclear startup catapulted into the spotlight by a groundbreaking government deal that signals a monumental shift in America's energy future. Today, we're unpacking the extraordinary rise of Oklo Inc., a company now synonymous with the cutting edge of nuclear power, and why its recent moves have captivated Wall Street and Washington alike. Oklo Inc., founded in 2013 and based in Santa Clara, California, is an advanced nuclear technology firm that designs and develops fission power plants to provide clean, reliable, and affordable energy across the United States. They also provide used nuclear fuel recycling services, showcasing a comprehensive approach to nuclear energy solutions. The recent catalyst that sent Oklo stock soaring was the announcement that it has been selected by the Department of Defense to deploy its emerging nuclear reactor technology at the Eielson Air Force Base in Alaska. This critical agreement comes in the form of a notice of intent to award from the Defense Logistics Agency Energy, acting on behalf of the Department of the Air Force and the U.S. Department of Defense. This isn't just a contract, it's a profound vote of confidence in Oklo's ability to deliver secure, sustainable energy for mission-critical infrastructure, aligning directly with national defense objectives. Under the terms of this anticipated agreement, Oklo will design, build, own, and operate its proprietary Aurora powerhouse, a cutting-edge microreactor. This innovative system will provide both electricity and heat to the Eielson Air Force Base under a long-term power purchase agreement. The project is a vital component of the Air Force's Microreactor pilot program, specifically designed to enhance energy resilience for national security purposes. The projected capacity of this Aurora microreactor is up to 75 megawatts of electricity and heat, a significant power supply for a remote yet critical military installation. The market's response to this news was nothing short of dramatic. Oklo stock surged more than 26%, hitting an all-time high of $67.66 intraday and closing at a record $64.17. This single session saw the stock jump $11.53. Over the last quarter, the Oklo share price saw a remarkable 101% surge, while its one-year total return has been an eye-popping 601.92%, significantly outpacing the broader U.S. market and the U.S. electric utilities industry. Year-to-date in 2025 alone, the stock has gained over 217%. Over the past 12 months, the company's stock has skyrocketed nearly 600%, and it delivered a staggering 229% return in just the last 6 months. This phenomenal performance underscores exceptional market confidence in the company's future potential. The enthusiasm surrounding Oklo extends beyond just this defense contract. A major factor fueling investor confidence is the high-profile backing of OpenAI CEO Sam Altman, who chairs the company. His involvement has significantly elevated Oklo's visibility among both retail and institutional investors. This strategic alignment with broader innovation in areas like AI and infrastructure has resonated deeply with the market, as advanced nuclear solutions are increasingly seen as essential for supporting energy-intensive sectors like AI data centers. Oklo's technology, the Aurora powerhouse, utilizes fast reactor technology to provide continuous energy that can operate independently from the traditional electricity grid. This off-grid capability is a key feature, especially for remote installations like the Eielson Air Force Base. The microreactor design promises emissions-free power with enhanced safety features compared to traditional reactors. And its compact, factory-built, and transportable nature makes it ideal for strategic deployments where grid access is limited or environmental constraints are strict. This unique advantage positions Oklo not only as a promising decarbonization tool, but also as a potential backbone for powering energy-intensive innovations. From a financial standpoint, Oklo's profile is still considered speculative, as it currently has no commercial revenue and has reported a substantial net loss recently. Analysts forecast the company to remain unprofitable for the next 3 years. However, the company maintains a robust financial foundation, supported by a current ratio of 36.23 and more cash than debt on hand. A recent $400 million equity raise further bolsters its long-term runway, providing the capital needed for its ambitious projects. The acquisition of Atomic Alchemy, a domestic radioisotope producer, also strengthens Oklo's supply chain and positions it as a key player in both energy and medical isotope markets, diversifying its future revenue prospects. The regulatory landscape is a critical aspect of Oklo's future. The company is actively advancing through the regulatory process with the U.S. Nuclear Regulatory Commission, which is reviewing its licensed operator topical report. This report introduces a novel licensing model aimed at streamlining the operation and approval process for future microreactor deployments. While the company's previous application was denied in 2022, they have since refiled and are targeting operational approval by 2027. It is noted that actual energy delivery might not happen until 2028 or later, as regulatory approvals and contract negotiations are still pending. The company's support for recent White House executive orders aimed at accelerating nuclear energy deployment further bolsters hopes for regulatory reforms that could benefit its operations. Wall Street analysts have taken notice of Oklo's potential. Research analysts at Seaport Research Petition recently upgraded Oklo from a hold rating to a strong buy, setting a price target of $71. Other analysts have also weighed in, with Wedbush lifting its target price to $55 and giving an outperform rating, and CLSA raising its rating to moderate buy with a price target of $74. The consensus from 10 Wall Street analysts currently gives Oklo a moderate buy rating with an average price target that implies additional upside from current levels. Despite the current share price reflecting a premium to the consensus analyst price target, suggesting limited upside based on immediate expectations, the developments in technology deployment and strategic alliances may eventually improve revenue and profitability scenarios contingent upon successful project executions. Institutional investors have been actively increasing their positions in Oklo. Vanguard Group Inc. significantly increased its holdings, now owning over 4.3 million shares. Other major firms like VanEck Associates Corp., Times Square Capital Management LP, Jack Capital MGP, and Millennium Management LLC have acquired substantial stakes in the company, demonstrating widespread institutional confidence. Currently, institutional investors own over 85% of Oklo's stock. Oklo's journey is a microcosm of a broader shift in how investors and governments view nuclear energy. As global demand for dependable, carbon-free energy rises, and with the United States accelerating its clean energy agenda, Oklo's innovative platform is positioned to play a pivotal role. Its success at Eielson Air Force Base could set a crucial precedent, leading to wider adoption across other military bases and potentially even rural civilian communities, reshaping the U.S. energy market with decentralized nuclear energy solutions. Oklo's journey from a Santa Clara startup to a pivotal player in national energy security is far from over, but the path ahead looks incredibly promising, marked by innovation, strategic partnerships, and a clear vision for a powerful, carbon-free future for America. Thank you for joining me today. I hope this discussion has illuminated the significant developments surrounding Oklo and the broader implications for advanced nuclear energy. Until next time, stay informed and make smart choices.